Welcome, friends, traders, and investors. In this episode of Trading System Lab, I'm going to present a strategy that I call calm range system, because this system buys when the market is going calm, but it does it in a kind of twisted way. Please ask questions. I want to know, what do you think about it? On the left, we see the equity curve, which is the green line, which is light green and dark green. Some people know already dark green means you're in equity and you're invested, and light green means you're in cash. And the dark line is actually the benchmark, just for comparison. And I always like it if the equity curve of the strategy is above the benchmark, obviously. If we take a look at the drawdown here on the left side, the system is doing better than with the buy and hold. As you can see on the right-hand side, where the drawdown of the system is 28% and the benchmark has double as much, 56%. Here's the strategy setting so that you can see it's the SPY. It's 25 years, benchmark is SPY, and we use 100% of the equity curve. And I gave it a little bit of margin factor just in case. We didn't use it, as you can see, but to have that standard setting like this. Let's have a look at the chart to see a couple of trades or recent trades. Here's one recent trade that we exited just recently, which made 0.46% profit. One interesting part of this strategy is the exit. The exit goes if the close is higher than the previous day's close. I know you're going to say, oh, you're peaking, you don't know where the close is. But in general, the close is... that is easy to see. Is it above the high or is it below the high? So let's take this trade here. This is clearly above the high, and this one too. Yes, there will be days when you think, it is above the high and the market is going down, and then it is below the high, but then you exited above the high. And then there will be days when it is below the previous day high, and then it goes up and is above the high. Then very likely you can exit the next day's open. This is the exit strategy. Now comes the interesting part. Another interesting part is, how do we get in? Black line is the range of today, high minus low, not the true range, just the range. And the blue line down here shows the lowest of the past 5 days. And if that goes down, that's the setup. Then we are ready to buy. Whenever that range goes down, except if we have a position already, then we don't enter. But whenever this range is going down, then we get ready to buy. Now, some people like to buy right at the close when that happens. But I was thinking, let's do it in a different way. We buy tomorrow at limit of today's close. We have got a whole day to buy to place a limit order. We say buy tomorrow at limit of today's closing price. The closing price was at 532.99, and we buy at 532.99. In fact, the opening, as you can see, is higher, and we waited for it to come down. The good thing about this one is we don't want to get into the market if the market already ran away. If it opens up 5% higher or 2%, we're not getting in there. We're waiting for the market to come down to yesterday's close. That's when we want to get in. And sometimes you can see, like here, the market is opening below the yesterday's close. So we get a better entry. We get an entry at 551 instead of the closing price. Yeah, it's a give and take. But this one is an easy setup and easy to trade. That's why I like that one. And here we actually hit nearly the closing price was, what was the closing price? 558. And the low here was 558. I've got to go into the comma here. 558.70. And that's where we bought. We waited for it to come down, which wasn't good because after all, it was a losing trade. The entry rule and the setup, exit rule, sounded pretty easy. It wasn't that easy to create it with drag and drop. So here is the drag and drop rule. It can be done. The buy at limit is easy. The sell next bar at market close is a little bit tricky because you need to look 1 day ahead, basically whenever that happens, so that you're not peaking. This is an extra feature that you need to put in. In order to use this feature, sell next bar at market close, you need to have the power pack, and you also need to have the power pack to look 1 bar in the future. You can find all this information of the Power Pack here, right here. This is all the extensions actually. Let's go down to the Power Pack. Oops, where is it? Too far. You click on it and then you get all this information. What is included? A lot of things, days, weeks, since last entry. And there's lots of things. It's updated. There's an extended scorecard and changelog is up here. This is what you're going to need for duplicating that strategy. So let's go back to our strategy. Let's take a look. The backtest results as we have it here. We have an average profit of 0.24%. With the equity curve we looked at, looks really good. This is the drawdown comparison. Let's take a look if we change it to QQQ. How does it perform on the Qs? Haven't done that. Doing it live now. And here we go. Oops, there we go. Wow, that's also quite impressive. Whereas I have the SPY here as the benchmark, which is a little bit unfair, but going against the Qs is also pretty difficult. Beating it. Yeah. The monthly returns, let's take a look at the monthly returns. I'm on the Qs now, which wasn't something I intended to do, but this looks also interesting. It has lower losses in the bad years. In 2008, it actually had a winning year. I think SPY probably looks pretty much the same. Interesting strategy, interesting approach. Let me know what you think about it. Please write your comments down there and let's discuss about it. I'm going to post a link to discuss that on the forum. But for our YouTube channel, it is much better if you post it and if you talk here about it, because that brings us up in the ranking. Thanks for watching and test smart, trade smarter.